Hello guys, we'll be looking at the topic withholding tax. We cannot post anything about withholding tax. We cannot do anything about withholding tax without first knowing the meaning, because it's not everybody that really understand that word withholding. So we need to shed more light on the meaning of withholding tax, and that is why I have this note with me here on the screen. What is the meaning of withholding tax? Withholding tax, this is just the abbreviation. It's an advance payment of income tax that is collected in advance by the government to offset future income tax payable. Let me repeat myself again. Withholding tax is an advance payment of income tax that is collected in advance by the government to offset future income tax payable. The government collect withholding tax. You are expected to deduct withholding tax from any payment you are making to vendors. And when customers are making payments to you, they are expected to deduct withholding tax. So that is it. So anytime you are making payment to vendor, you are expected to deduct between 2 to 5% from that payment and remit it to the government. What are the types of withholding tax? We have withholding tax payable and we have the withholding tax receivable. Now, for the withholding tax payable, it is deducted from vendor payments, like what I explained before. It is deducted from vendor payments. It ranges from 2 to 5%, depending on the kind of services rendered. Now, what about withholding tax receivable? It is deducted by customer when making payment. Now, when customers are paying to you, when they purchase your goods and services and are paying to you, they are expected by the law, they are expected by their following due process, they are expected to deduct between 2 to 5% of that amount they are paying to you. They're expected to deduct it, so which is legal, which is right under the law. Now, what are we actually doing here? Now, since we deal with both vendors and customers, we are expected to deduct from vendors as an organization, and customers are expected to deduct from us. Then how do we account for this in Sage 50 accounting? That is why we have to go into it, because the explanation about withholding tax is something that is something for another day, but we just need to briefly look at it. You understand? You can do more research on withholding tax yourself. So how do we account for when we deduct money from vendor, and when customer deduct money from more? How do we record it? How do we post it in accounting software? So, and I want you to know something again, that withholding tax payable is a liability account, because when you deduct withholding tax from vendors, you are expected to open an account called withholding tax payable. In this withholding tax payable, any money you deduct from vendors, you post it in that account, and you now from there remit it to the government. Another form of, that's why we say, well, when we open account for it, we open a liability account for it, because it's not our own. The deduction is meant, we are just like an agent to the government. It's meant to be remitted to the government. Another form of withholding tax is the withholding tax receivable. This withholding tax receivable, when customer deducts money from the goods we sold to them, because this money is part of our money. When customer deduct this money from the goods we sold to them, we record it as withholding tax receivable, because to us, to an organization that they deduct the money from, is an asset. To that company, it's a liability. Because accounting is a two-way thing. If it's an asset to you, it must be a liability to the second person. If it's a liability to the second person, it will be an asset to the other person. So in withholding tax receivable, when customer deduct money from our account, it is an asset to us and a liability to the customer. Why is it an asset to us? When this money is deducted, the accumulation of this money at the end of the year is used to what offset our income tax payable. There is a way to account for it. That is why we are here. That's what we want to look at in this particular course. We want to be able to keep record of all this, so that at the end of the year we can say, okay, this is the amount the customers have deducted from us, and this is the amount we want to use to offset our income tax payable. So how does it relate to Sage 50 accounting? What we want to do here is this: we want to maintain this in the chart of accounts, because this is not in our chart of account. We want to maintain withholding tax payable and withholding tax receivable in our chart of account. So let's go there. Let's go to our Sage 50. Now, I've told you earlier on, if you want to maintain any ledger in the chart of account, the first thing you need to do is to go to maintain. Now, when you go to maintain, you come to chart of accounts. Remember, we've not done this withholding tax before. That is why I have to organize a separate class for it, so that it will be much it will be much explanatory. Now, account ID. Before you open an account, you check that you check where the account is where the account reside. You can see that the account we want to start with withholding tax payable. Withholding tax payable reside in liability side. So you check all liability accounts. So where are we to put it here? Let's look at it here. This is deduction payable. Okay, income tax payable. Let's put it. This is 2390, 2380. Let's do 2390. 2390. I've already explained how to go about this thing. 2390. You have to ensure that it does not clash with the one that if it clashes with one that is there before, it won't save. That is withholding tax payable. And account type, which is very, very important. What account type are we using? That should be other current liability. Yes, this is it. Other current liability is the account type. Because I told you that withholding tax payable is a liability account. After this, you can see 2390, you save it. It will save. Now let's go there again. Has it been saved? Yes. This is what we just open right now. Okay. What about opening this? We've done withholding tax payable. Now, what about withholding tax receivable? We've done this now. We've opened it in liability account. What about withholding tax receivable, which is an asset account? We'll now go back to our stage again. Go to maintain, chart of accounts. Click on this arrow. Want to know where it is size. So from there, that is where we are going to open our ledger. You can see we are looking for asset side. You can see this is account receivable inventory. So it's going to be around here, around other current assets. So 14, let me see, 1410. This is 1400 because it is other current asset. We want it to be around other current asset. 140, 1410 now. 1410. Student tax receivable. Is it cash? No. It is an asset, other current asset. Is it account receivable? No. Because it's receivable does not mean that it's account receivable. It is other current assets, or other current assets. Can choose either other asset or other current asset. Either of the two will be good for it. You can see as it is now, you can now save. Now in our chart of accounts, account payable and account receivable has been taken care of. That is actually what we want to achieve here. At the end of this lecture, you should be able to know the meaning of withholding tax, the types of withholding tax payable and withholding tax receivable. What do we use withholding tax receivable for? I told you earlier on that we use withholding tax receivable to offset future income tax payable. You understand? But for this withholding tax payable, we act as an agent to government. We collect and we remit to the government. That is what we actually do. And I also told you that withholding tax payable is deducted from vendor payments. Anytime we want to make payment from vendor, we deduct the withholding tax payable, keep it in an account, and it is that ledger that we just open right now. It ranges from 2% to 5% in the current tax law, depending on the kind of services rendered. Withholding tax receivable will be deducted by customer. When customers are making payment, they also deduct. They back it up with evidence. The reason why they are deducting, and it is understandable. It's understandable. They are not breaching the law. It is according to the guidance of the law. So that is actually all about withholding tax. In our next class, I'll be doing transaction on withholding tax. How do you post transaction on withholding tax payable? How do we post transaction on withholding tax receivable? Thank you, and see you in the next class.